Hello, welcome back. 24th of July, and I got a special one for you today. This is the euro versus the US dollar. I have to say, for many months, this one was out of the radar, mostly because of the technical picture it had. But right now, things are coming to life again, and I want to show you the exact situation that we have here. But for that, I'm going to have to show you here the monthly chart and track back all the way to 2008, because that's where things have started to form. I mean, I'm talking about this massive trading range, right? That you can see here represented by this black setup. So we had the first leg going up, second, third, fourth, fifth, and then the sixth leg. The sixth leg, which, as expected, broke the setup completely, broke out of the setup and based itself below the main key level, which is the bottom key level 117.64. It's traded sideways, right, for quite, for almost 2 years, basically. It traded sideways, but then it went up, crossed back above that 17.64, but now it's coming back, and it actually based itself back below. And you can see how it's testing that level from below with these little spikes here that we had in the previous couple of months. But here's what I find really fascinating. Now, we all know that usually the sixth leg is the one to break out, right? So it actually did here. The sixth leg broke out, but it usually also reached the 161.8 Fibonacci projection level with relation to the previous opposite move, which in this case, it would be the fifth leg from the bottom to the top. Now, if you apply that 161.8 on that fifth leg, you will find that the level is right here, almost at 1. I mean, almost exactly at 1, 99.92, right? The parity level, the psychological level of 1, which is, I mean, remarkable in itself. So price did not reach that level yet, because what I think is going on here, I mean, the sixth leg had started right here, right? That was the end of the fifth. So I think we had the first wave in this case. Now remember, the sixth leg should be the one to break out. Basically, should be the one to propel a full cycle, a full trend. In this case, bearish trend. So we had the first wave, second corrective wave. I think we had the third wave all the way up. That was the fourth. So we might be expecting the fifth here to go seriously south. I mean, go seriously downwards, reaching the one level, but possibly even further than that. Now, this is the Elliott wave cycle that I'm talking about, but take a look at this one. So we did not reach the 161.8 yet, right? And we had this upside movement. But if you take this previous opposite move, and I'm talking about this local price section we had here recently, the last downside move, which is the last opposite move, and you apply 161.8 Fibonacci projection level yet again, this is exactly this level. Take a look, the blue dotted line. So it's no surprise to see how price made it exactly to that spot, right? Take a look at these spikes here. The first, the second, the third, even the fourth, right? Suggesting this level is a serious level, right? The serious resistance level. Very strong one, formidable, and I think it actually signals the end of the fourth wave. In this case, this upside correction. So this was just a local upside correction for the previous downside move, and you add up the fact that price established itself well below that 17.64. I think we have something interesting here on the downside. So we just established a new position on the euro dollar, short position on the euro dollar. We're gonna try to aim at two main levels, right? The first one, 109.35, right? That's an important one. It's also a projection, Fibonacci projection level, and as I've mentioned, the final destination, so to speak, the one parity, right? The one spot. So it should be interesting. In the meantime, I can say that the stop loss level is at 20.55 to begin with. As price begins to build up some negative momentum, we will adjust the stop loss accordingly. I'll follow up and I'll keep you posted. See you in the next one.